super excited. I'm back again with another interesting video. So guys, in this particular video, I'm going to walk you through on how you can make $100 with this particular strategy by just copying and pasting using just your phone. Yes, just your phone, guys. So basically, if you can see here, we are about to enter from here. So I've already even posted this strategy in our group. So we are just waiting for one criteria to be made from just around here, and we are good to go. But before we can actually enter this strategy, I would want to explain to you so that you can be part of what's going on. So this is a live market, if you can see, and people are waiting for this particular strategy to play out, and you can be one of them by just joining the Telegram channel. The link is in the description if you have not yet joined our Telegram channel, and you'll be part of what is going on in our Telegram channel. With that said, guys, let's get back to the strategy. So if you can see, we are having something here. This strategy is applicable on 1 hour time frame. It's applicable on our 1 hour time frame, and it's actually a strategy that will take you, it's a long trade. You're going down with the market. It's applicable on boom and crash, but also you can use it on volatility, utility as well. So there are just a few things that I would want to explain to you so that you can get started. To begin with, you're only using these 3 indicators. We are having a moving average, our first moving average, we are having a second moving average, and we are having our awesome oscillator. So just 3 indicators, and you can make serious money with this. I'll just quickly going to delete everything from here so that I can walk you through step by step on how you can get started with it. So we click there, we delete, and we have a plain chart just like this, the way everybody is looking at the market. To come on this icon, if you're using an iPhone, it will be an F icon. You're going to click there. When you click there, you're going to also come here on your main chart. You're going to click here on an F plus there, and you're going to come here on moving average. So our first moving average is going to have these following parameters. We're going to have a period of 21, shift to 0, method exponential, apply to close, and it's visible on time frame, and ensure that it is star red, and you click OK. And you're going to come again on our main chart. You click there, you're going to go for another indicator, which is a moving average with the following parameters. Going to change it to 10 there. So the period will be 10, shift to 0, method exponential, apply to close, and it's visible on all time frame. And this time around, we're going to put green as a color. We're going to put green as a color there, and we'll click OK, and we save it. We're going to have something like this on our chart. As you can see, we're having something like that on our chart. And we're going to come again for another indicator. We click there, and we're going to come on our main chart. We're going to look for the awesome oscillator. The awesome oscillator. Going to click there, and it will have the following parameters. So on your awesome oscillator, you're going to have the following parameters, guys. So you're going to have your level. You're going to come here and add 1 level there, and you're going to indicate this as level 1, and you're going to come on here, black will be your color of choice, and you're going to click OK, and you're going to actually ensure that the pixel is to the maximum, guys, to the maximum 5 there, and you come back here. So on your upper or your value up, on your value up, you're going to have it green, and on your value down, you're going to have it as red, and you're going to click OK, and you're going to have something like this showing on your charts. So we have something like this, guys. If you can see, we have something like this showing, on our charts. And this is where now the sweet explanation comes in. So if you have reached this far in the video and you have not subscribed to the channel, subscribe to the channel, hit that icon bell so that you can be notified each and every time we post a new video, and ensure also that you like the video so that it can reach as many people as it can reach. And for those, link in the description, I have a course for you. It's only $1. I just want to see how serious you are, and you can get started with Forex. You can be a person that has already been trading in the financial market, or you are new to Forex trading. Everything is covered in that particular course. You just need to get started. That's the thing. So if you can see here, we're having something amazing happening on our main chart. we are about to enter. So we are only waiting for a close. But before we wait for a close, like I always say, it's very dangerous for you to only make a conclusion of entering a trade based on an indicator. An indicator is only there to support what you think. So what is actually making us to actually think of going into the market? The thing that is very important if you are trading the financial market that you should consider each and every time if you want to enter a trade is the market trend of that particular market. So what's the market trend of this particular market? How do you know that? You start from higher time frames and going down to lower time zones. It will give you an idea which direction the market is going towards, and you trade along the trend. I hope you're getting me. So what we're going to do is that we're going to go on our higher time frame, which is a daily, and we'll notice what is going on here. So we can basically appreciate that there can be a change in trend in the market, or the market can actually continue going up. But as it stands right now, we are seeing new levels being formed here. So we saw that the market was continuously pushing up, and the market came down and made this level and came back here, and we have this as our new level there, and it pushed down there, and we have noticed that the market has actually come back there. So most likely this is our new level that is about to be formed, but this is on a daily. So we understand that this is on a daily. We can have the market go down there, changing the trend. So we are waiting for a break of structure in our higher time frame, which we anticipate to be or happen anytime soon. So from there, we're going to go on our 4-hour time frame there. If you can see on our 4-hour time frame, we have something that is like this. The market pushed, it pushed there, it pushed again, if you can see. Then the market pushed down there, and it pushed here, and making something like this, if you can see there. And here the market pushed down here, and if at all you have done a course, you understand that there is a level of imbalance. So the market is coming to fill up the liquidity up there, and we can enter from there. If you are done our course, you know that liquidity and imbalance, we have explained all this stuff. So from here, we are anticipating that the market will have a down push to the downside. You see, right? So from there, we can pick that, okay, the market will come and fill up this position, which it filled up here. If you can see, the market filled up that position. So we're having a new level there, which we anticipate that the market is coming to fill up this level, or maybe probably come a little bit before it can actually come down there. But what we are anticipating is that from a daily time frame, from the daily, we are saying the market is actually doing what? Going down. And on the 4-hour, we are also anticipating that the market is doing what? It's going down. So from that, we're going to go in on our 1-hour time frame. So this is where we are entering our trade from. So from that explanation now, we are safely saying to say that we are actually looking for what? We are looking for sales, because we can see that there was a push here in the market, but here we have anticipated from looking at higher time frames that there is a change of structure that is happening, and most likely the market is actually going down. You see, right? But why is indicators in this case very important? Because after us concluding that we are going on a downside, we still need indicators, guys, to actually confirm that for us where we are going to enter from. So the moment we see a closing happening between these two lines, between a red line, whenever we see the red going on top of a green one, we know that we are supposed now to enter. But what is making us to enter is noticing what is going down here. If you can see what's going down here, the moment we see a candle being formed on the downside, a red candle being formed on the downside, the moment we start seeing volume starting to be built from the downside, if you can see from the downside here. So from the first candle to be formed on the downside volume here, we are going to enter. But we are only entering if we see a confirmation of a candle being formed here, and we have a closed line there. And we know to say that we are actually looking for what? We are looking for buys. So that's the only thing that we are waiting for, guys, and we're good to go. Let me show you from the past history so that you can get to understand what I mean. So if you can go back in, let's just say we go back in time, or let's make it here, we go back in time. If you see, right, we had this momentum being built here. If you can see, we had this momentum being built here, but we also had it that this was changing direction. It went like that, it went like that, it made like that, came back to fill in liquidity there, and we were anticipating, just like we're anticipating, a down movement there, if you can see, right? But we couldn't enter this trade unless if we see what? A closing happening. So we looked for that closing here. We saw that this closing is happening from here, if you can see. And from down there, you can appreciate that this closing is actually happening there. We saw here the market changing. We saw volume starting to build from there. So we were supposed to enter just from immediately here, and you put your stop loss above the previous high there. You put it above the previous high here, just above here, your stop loss, and we measure 1 to 3, which simply means if you are risking $100, you know to say that, okay, you are going to make somewhere around $300.